maybe Koji-san, you give a quick introduction.
Okay, my name is Koji Naito, the based in Tokyo for JERA Capital Market team. I am the only guy for the research guy within the capital market team. We have two different research functions in Tokyo. One is the pure research, so providing research report. The other one is the capital market research. The capital market research is working with the investment brokers to speak with investors for regularly. So my knowledge level is to be quite deep than the pure research team.
Okay, so I think we can start off. So the monetary policy in Japan remains very accommodative and very friendly to support the economic recovery. So obviously this is very unique when we compare it to other major central banks like the Fed, like the ECB, who are pursuing a more aggressive policy tightening to address inflation. So what do you think with such a backdrop? What would that mean for Japan's residential property?
Yes, not only for Japan residential market, but also all sectors in Japan. The current BOJ policy would be going to keep for the time being, because the current CPI inflation rate in Japan is the really controlled situation in comparison to other major markets. So the BOJ does not necessarily to do the further interest rate spike. So that would be a quite good information, quite good encouraging message to all of the real estate investors that they can afford to lend the money with it's a quite marginal cost of debt. So not only for residential but also property market itself is a quite good.
And talking about inflation, I think that the stats are showing that the inflation in Japan has been above the 2% target for quite some time now. And then we've also seen reports about the largest wage growth that will be coming soon that has been ever happened in the last 25 years. So kind of what's your sentiment on this and how do you see this affecting the market?
Yeah, actually the rent for the residential rent has been seen in the increasing in the selected market, especially in Tokyo. So the rent is increasing, but the people's salary is the same thing. So that would be slightly negative impact for the residential market. But having said that, I think the current salary basis would be improving in the near future. So even though BOJ is still doing the same, I think the Japanese residential market is quite resilient towards the future.
Right, and moving on, since we're talking about money, the Japanese yen obviously has gone through quite a fair bit in the last 12 months and getting to where we are today, kind of around the 138, 140 yen to the dollar. How do you see that affecting investments into Japan real estate markets, especially from cross-border transactions point of view?
Yeah, the cross-border transaction has been increasing really significantly at this moment. And also actually, I have been doing the same type of presentation, the market presentation, for about more than 70 times since the beginning of this year. That will be 3.2 times larger than this time last year. So this is the quite interesting stats, and also this shows that the interest from the overseas investors will be increasing really significantly. So this is because not only for the financing cost will be quite marginal, but also hedging the currency stuff will be available for all of currencies over the Japanese yen. So that is the quite good reason, the encouraging message to all of offshore investors to keep the motivation for investing in Japan assets.